Hi, Miss Rachel Dobbs. Hi, Lamar. How you doing?
Good. How's it going?
Good. Good evening, Rahel. Oh, there's Andrea's face now. We can see you. Hello. Welcome, Pedro.
Rachel Dobbs. I loved your unboxing today.
You're on mute, Rachel.
Thank you.
Wonderful. Well, not to waste anybody's time this evening, and let's get started. Welcome everybody to SeminoleTech, March 3rd. We appreciate you spending your evening or beginning of the evening with us. We have a great lineup today. Before we get started, I'm going to invite Ingrid from the Chamber, and she's going to give us some Chamber news. Welcome, Ingrid. Thank you. Just say 1 second.
Sorry, my computer just went off on me. I have like 3 monitors and everything just went blank. So here are the news. Good Morning Seminole is sold out in person, but we still have Zoom tickets available. So if you know that someone that's interested in doing the Zoom, let them know. Chamber U is back in person. So you register now. It's next Wednesday. And then we only have less than 25 tickets for the Professional Women's Luncheon. So if you're interested in going, better register real quick. And then just a member tip, if you register for an event, and like myself, I need a reminder the day before, the day after, you know, like the day of. So there's a little calendar icon that you can add to your favorite digital calendar, like if you have Google Calendar and stuff. So when you register, just click on the little calendar icon and add it to your own calendar so you don't forget. And then lastly, if you're a guest tonight, let me know if you have any questions regarding membership. You can always contact me or Christina Peacock. And that's it.
Wonderful. Thank you so much. All right. Well, we want a special thanks to our wonderful sponsor, RB Advisory. Please call them for any cybersecurity or cyber compliance needs. Also, please go on to Facebook and LinkedIn, hashtag SeminoleTech. Take pictures tonight of the event, talk about it. Please like our pages as well. We've been really stepping up on our likes on Facebook, so let's keep that going and sharing our link. So we are going to go into a little bit of networking. Just like any other meeting, we want everybody to go around, introduce themselves, who's a good referral for your business. And we're going to stick with this because I think it was really successful last month. But give us your tech tip or technology that you recommend for small businesses. And I'm going to start at the top of my list. And Rachel Dobbs, you are at the top of my list.
Unmute myself. Hello. That's my tip. Unmute yourself before you talk. I think that's very useful information.
I think that's a good tip, actually.
A good one. My boss actually texted all of our office the quote of 2020. You're on mute. I'm like, yeah, for sure.
Absolutely.
So Rachel Dobbs, I am with Hylant. We are insurance services, and I work mostly with middle market companies. I'm a cyber risk geek. I love talking with companies about cyber risk. There's not a lot of insurance brokers out there who understand that the biggest danger that companies face today is their data. Without your data, you can't get much done these days, no matter what industry you're in. And protecting that data, particularly when your workforce is working from home, is so important. So that's really what I do. Highland can do anything when it comes to insurance, whether it's small, medium, or large. My expertise is with middle market companies, but really I just like being a connector within the community.
Wonderful. Thank you, Rachel. Next we have Lamar.
Hi guys, Lamar Barnett here. My company is Steel Bubble. I've been in business for going on 4 years now in the Lake Mary area. I do know a couple of you guys. Rahel, good to see you again. Looking around. My cybersecurity specialty is to train and help people who are individuals and small businesses to understand their risks online. That's the main thing that the business does. Just me, myself, and I, so I'm a small guy, small business. I like to really help individuals more than anything else, and be able to provide value to them in terms of especially retirees, medical professionals who are operating their offices by themselves. The small, really small businesses like that are the people I like to work with. So I have interests in various other things. I'm a New Horizons service dog puppy trainer. I spend a lot of time with those dogs to help them get acclimated to various social events. I'm also a writer. I belong to the Florida Writers Association and have been published in their annual collection in the past. And I'm a Stephen minister. Have been doing Stephen ministry since the late 1990s. So both a Stephen minister and a Stephen leader. If anyone has questions about that, I'd be glad to answer those things. But I like to do a lot of different things. So that's me.
Sounds like it. Wonderful. Thank you, Lamar. Next up, we have Andrea. You're on mute.
Hello. All
Hello.
right. Start over again. Okay. This is Andrea, Certified Computer Solutions. We are a 20-year-old IT firm out of Longwood. We specialize in IT security and Zoho CRM. And I guess a tip is that today there's a security bulletin that just came out from Microsoft about on-premise Exchange servers. So if you're an Office 365 user, this does not apply to you. But basically, because of all the China hacking attempts that are happening right now, there's some big patches that came out for on-premise Exchange servers.
Good tip. Thank you. Next, we're going to be hearing from Jason, but Jason, you want to just give a brief hello?
Yes, can you hear me?
Yes.
So I'm Jason. I'm the co-founder and CEO of Miventure, and we're building a platform that connects small business owners to micro lenders. And you'll be hearing a lot from me, so I'm not going to go into too much detail. Moved down here from New York with my partner, and so I've been in Florida since April and really enjoying being here so far. And my tech tip is I try and make a Loom video for like everything. So for training, I find making these, if you've never used Loom, it's like records your desktop. And for whenever we're reporting a bug or doing anything, I make a Loom, and they're really easy to send people links to those videos, and I find them really helpful, and the team finds them helpful. So it's a good tool, and it's free. So.
And is that spelled L-O-O-M, Loom?
Yeah, L-O-O-M.
Okay.
Yep.
Wonderful. Wonderful.
Awesome.
Thank you.
No
Rahel,
problem.
I got you up next.
Good evening, everyone. My name is Rahel Noor with Tax-Deep Accounting Solutions. Good referral for me right now is like any small business owner you see who are pulling their hair out, trying to figure out the taxes and stuff. And, that would be great referral for me, and small business owners who are trying to keep up with their financials and stuff. I'm an accountant, but I'm here on SeminoleTech because I have a little bit of a background of tech and stuff. So I enjoy talking about tech, learning about tech, and all of everything tech and stuff. So I mean, I don't know if it's a great tip or not, but like for people who try to do a lot of different things and stuff, I have like 10 different Gmail accounts and whatnot and stuff, and it's kind of hard to keep up with these sometimes. So I pull it all into one email client. But I mean, also, if you have Google accounts, Chrome will allow you to create multiple instances of Chrome and stuff, and you can bring it up with a different profile and stuff. So I have like 4 or 5 Chromes running at the same time and stuff. So if you are like me, doing multitasking and stuff and involved with different things, that's a great way to organize yourself.
Wonderful. Thank you. Next up, I have Paul. Good evening, Paul.
Good evening. How you doing? Paul Mcnally. I'm a business broker with Central Florida Business Brokerage. We help connect buyers and sellers of businesses. And not being really savvy with tech, I love playing around with tech, but you know, with when I grew up, we grew up not even with calculators. I had a slide rule in high school. You know, so I came into this game late. My biggest tip is, if you don't know what you're doing, ask for help.
I like it. Tony Smith, you're up.
Good evening, Tony Smith with Mobot of Orlando, robotic mowing. A good referral for us would be, you know, churches or senior living facilities that might be looking for, you know, mowing services. So we can handle that really well. And then any individuals who are tired of mowing or are sick and tired of their lawn care service, we can help them out. My tech tip is join SeminoleTech, because you meet a lot of other smarter people that have a lot of good tech tips that you can then learn from. So I'm looking forward to checking out this Roomba, or is it Roomba, something like that, Jason. So that sounds kind of interesting.
Awesome. All right. I think I've got everybody that we have right now. So I'm Kate Crockett. I'm from RB Advisory. Cybersecurity attacks threaten 42 million businesses each year. So we specialize in providing customized training and support services to assist businesses in mitigating their risk by implementing best practices and a holistic methodology. We are one of the nation's leading experts on cybersecurity, risk management, and compliance, and we are also certified as a CMMC RPO for anybody that is looking at working for the DoD and needs to get CMMC certified. So I'm Kate Crockett with RB Advisory. My tech tip is, I have been hearing a lot about a new app called the Clubhouse, and getting your business out there and being a voice. It's just voice recordings. So you might want to check out Clubhouse. So without any further ado, today we're going to hear a little bit about financial technology. We have our speaker, Jason Crystal. He is the co-founder and CEO of Miventure. And he's passionate about working with technology companies in the fintech space. Miventure was founded on the belief that when small businesses are more successful, communities become stronger, and unfortunately many great business owners can't access capital at a fair rate to grow their business. Miventure solves this problem by connecting capable owners with micro lenders around the country. So here we have Jason Crystal. Go ahead and take over. Good evening, Jason.
Thanks. Can you hear me now?
Yes.
Perfect. Are you seeing some PowerPoint stuff?
We are.
All right. So we're going to cover a range of different topics. First, we'll talk about just what does the small business lending landscape look like right now? What are some options you might not know about? And then we'll talk about crowd lending, we call it, in more detail, because a lot of people don't know that crowdfunding options are available for small business owners, and might ask some people some questions. So I always like to start by talking about we're going to focus mostly on raising money, but that's not the #1 reason businesses fail. So there was a CB Insights survey of 1,000 failed small businesses, tech companies, and they found that the #1 reason was actually someone created a product or a service that no one needed. And then, run out of cash. About 1 out of 3 business owners run out of cash. There's all sorts of other problems. You're maybe not the right team to solve the problem. Failure to convey the value proposition. The product might just not be good, might not be priced right, or be mistimed. So we're not going to talk about any of that stuff today. We're just going to talk about how you can raise capital. But I always like to make sure that people know that usually there's other things going on with the business, and it's important to have all your bases covered. So right now, 57% of businesses are reporting that they're either in fair or poor condition. Obviously, the most impacted industries are the travel industry and physical locations in retail. But even healthy businesses that are not in those sectors are facing a lot of challenges. And so there might be restrictions on the brick and mortar, but there might also be supply chain disruptions. It sounds counterintuitive, but there's actually, if you need people to work physically on location, there could be labor shortages, even with higher unemployment, and credit availability. So as kind of the pandemic roiled on, lenders tightened their requirements, which caused some credit availability issues. And so that's what we're seeing. The tightening requirements means people are either not getting approved for everything that they need, or they're being partially approved or denied. And this is something that was already happening before the pandemic, as community banks started to merge together, as online lenders and merchant cash advance companies started to kind of come on the scene. Ability to access capital at fair rates was kind of an issue before and has been exacerbated by the pandemic. And so what we're seeing is 91% of employer firms have sought some type of emergency assistance like PPP or EIDL loans. So hopefully everyone was able to apply and seek that assistance if you were eligible. But eventually this will end, right? So what are we going to do? What are we going to do when it ends? And that's what we're going to talk about today. So there usually are options available at every stage. We're going to focus mostly on debt today. Most small business owners typically prefer raising debt as opposed to equity for their business. So we'll touch briefly on other options, but we're going to focus mostly on lending instruments. So there's 3 categories of businesses. There's kind of the startup where you've got no money, no profit, or you're burning money. Early stage where you start generating revenue, you might be profitable, you might not be. And late stage where you have more money, and again, you might be profitable or more likely to be profitable. So in the very early stages, most people self-fund or put money on credit cards. And the #1 way that people fund as well is friends and family. And for a lot of people, rewards crowdfunding could be, especially if you have a product service, a really good way to raise money. So has anyone ever heard of Kickstarter or Indiegogo? I see some nodding. So Kickstarter and Indiegogo are rewards-based crowdfunding sites where instead of getting a loan, you can pre-sell your product and you could give a reward. So it really lends itself very well to product-driven companies where you're making, let's say, a board game, or you're making some type of product. And then angel investors are also kind of at this stage, and they're willing to have more flexibility to structure deals that are either debt or equity or hybrid. But typically, that's how most companies get off the ground, with friends and family being the most prominent. And then at the early stages, a lot of people choose to bootstrap, which is reinvesting your profits. That's a really safe way to go. It can sometimes slow your growth, but there's a lot of benefits to doing that. And then this is where online lenders and merchant cash advance companies kind of will start becoming interested in you once you have revenue. And there's all different stripes of these companies. It's important, we'll talk about how to compare loans, but the big difference between an online lender and a merchant cash advance company, which is also called an MCA, is an MCA is technically not a lender. They're giving you what's called a cash advance. And because they're not classified as lenders, they are in the state of New York, but because most are not classified as lenders, they're not subject to what are called usury laws. And usury laws are what protect you from paying an absurdly high interest rate. So it's really important. We'll talk about how to compare loans. And then banks typically are looking for, they have a lot of requirements. We'll talk about what those are. And sometimes you can get an SBA 7A loan to kind of subsidize some of the risk for an institutional lender like a bank or credit union to become available for those. They typically have better rates. And then we'll talk more about investment crowd lending, which is Reg CF, which stands for crowdfunding. And that's a way to raise money from people in your community. And we'll talk more about that. As we get more to these later stages, that's where banks and credit unions really open up. They can give you lines of credit. And then investment crowd lending continues to be an option here. Right now, the cap is increasing for Reg CF from $1.7 million to $5 million in terms of what you can raise. And for Reg A pluses, it's much higher. It's kind of like doing a mini IPO where you can raise anywhere. It's 50 million now and is going up to, I believe, 70 or 80. So these are options a lot of people don't know about that you can raise a lot of money before you kind of had to go this private equity or IPO route. And now companies, one of the reasons you're seeing them stay private much longer is there's a lot more funding options that exist. And then SPACs we really won't get into, but they're a way, an easier way for a company to IPO. And so what's important to know as you're looking at all these different options is the rate ranges vary very wildly in each option. So if you're getting an MCA loan or you're factoring, the rate ranges really can vary. So in order to qualify for, everyone wants kind of the cheapest rate. So how do you get it? So to qualify for the better options and the cheaper options, what lenders are looking at is what are called the 5 C's of credit. And they're looking at credit score. They're looking at, do you have any collateral in the business, like equipment or real estate, cash flow. And cash flow is what's left over every month after you pay your bills, how long you've been in business, what industry you're in. So, we were talking about the pandemic earlier. So if you're in brick and mortar and you're in a state where there's a government shutdown, they'll take that into account in the risk. They're also looking at client diversification. So if you have $1 million in ARR or annual recurring revenue, if it all comes from one client, then that's very risky because if that client leaves, your business will kind of shut down. So they look at, how many clients you have and what's the average kind of ticket, how you want to use the funds. So you might have a very profitable business, but if you want to kind of fill up a swimming pool with whipped cream, that's not going to really have like an ROI. So they take that into account. And then through securitization or pledging collateral or personally guaranteeing are other ways that they kind of mitigate risk. So in order to kind of get better options, you kind of need to be healthy in these different areas. And it's very confusing because every lender shows their rates differently. So they'll often show the interest rate, but the interest rate, it's important, but it only tells part of the story. So what you really need to look at is what's called the APR, which will show you the total cost of borrowing. And that takes into account all the fees that might be associated with that loan, which is also called origination. And it also takes into account the time period, the number of payments. If you should ask about things like prepayment penalties. So all the terms of the deal are also important. So when you're comparing all these loans, it's important that you compare them apples to apples by comparing them using APR terms. There's all sorts of calculators online to do this. If you type in APR calculator and add in all the fees. If you need help, find Rahel, I believe is an accountant. It's really worth it to spend an hour or two on consulting to compare rates if you're not comfortable with these formulas, because it could really save your business. By the time people realize that they've gotten into a predatory loan, it's really too late. They're stuck. They've signed on the dotted line. So definitely that's important. And so a lot of people are aware of credit cards, banks, and online lenders. So I want to spend this last third here talking about crowdfunding, and then we'll answer any other questions. So crowdfunding for unaccredited investors really became legal in 2016 through the Jobs Act, what's called Title III of the Jobs Act. So there's two types of crowdfunding. There's non-investment crowdfunding, which is unregulated, and those are things like GoFundMe is a donation-based crowdfunding campaign. So when people donate to a GoFundMe, they're not expecting any return, so there's no regulation, which it helps a lot of people in a lot of situations. There's actually a lot of for-profit businesses on GoFundMe. One of the downsides for the donators or the users is because it's unregulated, there have been instances of fraud. So you kind of have to do your research to make sure campaigns are legitimate. And then rewards-based crowdfunding is also unregulated, where you're going to get a product or some type of reward. And then we're on the other side, the investment side, and there's two subtypes to investment crowdfunding. There's debt, which means that people are investing and they're getting some type of return that's displayed to them over some amount of time. And then there's equity, which usually is done through what are called crowd safes, which is very similar to a safe agreement, which was developed by Y Combinator. It stands for Simple Agreement for Future Equity. It's a way to keep the deal simple and the legal costs low until the next round when things convert. So a lot of platforms use crowd safes, and they kind of mimic shares or ownership in the company. And those are really the different types of crowdfunding. So, we can talk more about that later. So investment crowdfunding, how does it work? So any small business owner can actually launch a crowdfunding campaign on their own if you want to. There's all sorts of technology that you'd have to create. There's all sorts of regulatory constraints where you have to do KYC, which stands for Know Your Client. And to do it in a compliant way is quite difficult. So what most businesses do is they list their offering on a funding portal or a broker dealer. So Miventure is licensed as a funding portal, but broker dealers can also do this. And the investors come onto the portal, they see all the information related to the campaign and the deal terms, and they can decide, I either want to invest in this company or I don't. And that's usually an easier, more compliant way and time-saving way to do it. But do want you to be aware that for a lot of companies, especially the ones that are doing a Reg A+, it might be worth it with the platform fees to launch their own campaign. So it's something you can look into. And so how do you know what are kind of the pros and cons? And we'll stay mostly focused on the debt side. So the pros, just like any loan, it's not dilutive. So you got to pay the money back, which is a con, but people aren't going to own shares or take any ownership in your company. Another advantage of doing crowdfunding, whether it's debt or equity, you're building awareness about your company and kind of getting your name out there. People are seeing it. They're also financially and emotionally invested in your company. So they're more likely to use your product or service or tell somebody about it. You have a lot of capability to set your own terms within reason. So, the platform can decide to either let you on or not based on every platform is different, has their own rules. But generally, you'll get better terms than not doing crowdfunding. And because you're raising money from people in your community and it's accessible to everybody, you're not dealing with just one loan manager. It tends to be less subject to bias. So we actually see in the data that women and minorities have disproportionately successful crowdfunding campaigns than other groups, which is interesting. And then what are some of the drawbacks? It takes time to receive the capital. So with an online lender, you might get the money pretty quickly in less than a week or so. And with crowdfunding, the campaign has to run. Campaigns, if they hit their max goal, can end early, but most will run generally the full duration of somewhere between 60 to 90 days, depending on the platform. It takes time to create a well-crafted campaign and to market it. If you don't already have a big community of people who are passionate about your company, there might be some marketing costs associated with promoting your campaign in order to get it funded. And because it is regulated, you have to file documents in what's called the Edgar portal with FINRA and the SEC. And so some information about your company is out there publicly. It's mostly historical information and kind of broad, high-level information, but something to take into account, especially if you're in the very early stages and maybe there's something particularly proprietary about what you're doing. And so just to kind of sum up here, if you have a pre-revenue product, and it is a product, then rewards crowdfunding might be the way to go. Platforms like us and Honeycomb Credit, Mainvest is another that does mostly restaurants and breweries. They can be good businesses that service debt. There's one that specializes in inventory factoring called Kick Further if you need money for inventory. And then we call this the unicorn or bust strategy. But for the ones that are high growth tech companies with a lot of risk that are doing equity, the top three platforms are Start Engine, WeFunder, and Republic. They make up about 80% of the equity crowdfunding space. And so what are some of the deal breakers? If your needs are time sensitive, it's probably not for you. It takes some time. If you're not willing to put in kind of the time and effort to make it personal, make a video, include pictures, and really spend time making a nice campaign, probably also not for you. And if you don't have a big built-in community, not having some budget for marketing efforts is also a consideration. And so just kind of to recap, when you go to find capital, you should try and find the options that are in the right stage for your stage of growth so that you are spending your time wisely. You should always compare rates of everything that you do, apples to apples, as best you can, to try and figure out the all-in cost of capital and how much is that loan going to cost. And crowdfunding is a potential option for many businesses at different stages. So as you kind of poke around, it's worth talking to a few portals and seeing if that is a good option for you. And then I always like to tell people, don't lose momentum while you're fundraising. Fundraising can kind of become a job unto itself, and there's so many different options. You got to keep your business moving forward, but you also don't want to get trapped in a bad deal. I want to open it up to questions. I realize we covered a lot of different stuff, so I'm happy to answer any questions or talk about any specific cases anyone has, or if it's relevant. It's very quiet.
Yeah, Tony, I see Tony raising his hand.
You can always count on me for a question.
I knew it.
So Jason, that was awesome. I think I learned more than my first year of finance. That's unbelievable what's out there.
This is a good time for me to mention that I'm not a financial advisor as well. So I'll consult your financial advisor when making any decisions. Thank you for the reminder there.
No problem. Well, you definitely know a lot about it. So these various forms, I mean, how big are they? How many companies? I mean, I've heard of crowdsource funding like Kickstarter and the others, but a lot of those others, including yours, unfortunately, I've never heard of this stuff. I mean,
yeah, well, we're pretty new. We launched just in January, and we're a startup. We're getting off the ground. So it's a good question. So in the reward space, there's really two dominant players, which are Kickstarter and Indiegogo. In the donation space, there are a few that are emerging, but GoFundMe is the dominant player there. They're in the investment crowdfunding space. There are about 40 portals, what are called funding portals. Broker dealers also, from a regulatory perspective, can act as this intermediary, but very few do. They're kind of doing other stuff. Some funding portals become broker dealers in order to create liquidity by creating a secondary market. But this is only really investment crowdfunding. The rewards base has been around for a while. Kiva, are you familiar with Kiva?
I'm not, no.
So Kiva was kind of one of the first pioneers in crowdfunding. And what Kiva does is microloans for developing countries. So I definitely recommend, it's worth checking out. And where you can lend like $100 to somebody in a developing country who might use that money to buy a cell phone and rent share time on the cell phone. And what they found was doing these microloans, the people repaid them, even though the interest was quite small. They were establishing credit and creating a credit system where there wasn't one before. So Kiva was one of the real pioneers, but in the United States, investment crowdfunding has not really been around for a long time. It's growing. There's about 1 million people in the United States that now participate in investment crowdfunding, and that's expected to grow over the next 10 years. So there's a lot of power in a lot of people making small investments in a company. And one area we see that as well is in politics. So when you look at political contributions, we're seeing a lot of this massive amount of money raised every election cycle is actually coming from relatively small donations in the $30 to $50 range. So there's definitely more demand for capital at fair rates than there is supply, and so there's kind of a lot of opportunity in this space. And tech companies have known about it for a long time, and equity crowdfunding is quite popular with them. But small businesses, really, what I've found is they're not aware that this option exists because they associate crowdfunding with equity, and they don't know that debt crowdfunding or crowd lending, whatever you want to call it, they don't know that it exists for them. So that's one of the reasons I do these presentations.
Great.
Did that answer your question?
Yes, thank you. I'll have more if there's not any other questions. It's very interesting.
I was wondering what's like the range of how much money is usually raised for like the different levels that you showed?
Yeah, that's a good question. So it used to be, banks were kind of, where you go to get a loan. And now what we're seeing more and more, especially as community banks have consolidated, the online lenders or the fintechs, sometimes they're called challenger banks as well. They've really grown because they make it very, very easy to apply. So when you go on to, let's say, Lendio, or you go on to Fundera, which is another aggregator that aggregates all the loans together, you can apply for maybe 50 loans at once. And what's interesting nowadays is you can plug in kind of your QuickBooks or use what's called Plaid to plug in your bank account. It uses its fintech wizardry to crawl around in there. And they have so many more data points and so much more data that they're able to decide if someone is creditworthy, and they're able to lend to them at a certain rate using AI and machine learning, and service loans that the banks won't service. So one of the main problems with the banks and credit unions and why they're losing market share is not because they don't have capital, it's because they don't deploy the capital. Their eligibility requirements are quite high. So their default rate is very low. It depends on the type of loan, but typically their default rates are under 2%. So they're very risk averse, and it's in a sense what I've been talking to a few bankers as we've been doing this, and I think that from their perspective, they feel like that people with their money in the bank want them to be making safe loans. But there's the end result is people who need access to credit at fair rates from a bank or credit union that's has credibility or is trustworthy. They're not able to get it. So when they go online, there's thousands of online lenders. And so many of them are very reputable and are very good. And they hold themselves to a very high standard. And then many are very predatory. So what's happening is small business owners are sometimes getting trapped in some of these more predatory options, especially with the merchant cash advance companies that are not technically classified as lenders. And there's some regulation that hopefully that'll be changing in the coming years. But it's really important to educate yourself on how to compare loans, because you can get in a loan very easily. It might look like a very attractive rate, but you're paying like a 300 or 400% APR. And if the lender showed the terms to the business owner in those terms, that they actually understood what the cost of capital was, they would say, no way, I don't want that loan. But unfortunately, there's lots of ways to make the rates look attractive, because you can put in hidden fees, you can take payments daily instead of quarterly or monthly. You can sometimes they say things aren't fees that actually are fees. So even when people ask, are there any fees, they'll say no, and then they'll be like, oh, well, there's this thing, but that's not a fee, that's something else. So you really have to ask the questions, and you need to make sure that you understand all the inputs and what are you actually going to pay, and ask the questions and take the time. And because the landscape has become so confusing, I really recommend to most people to take it to their accountant and just have their accountant look at a few different options with them and help make sure that they're making a good decision.
Awesome. Are there any other questions? Because I have more. Yeah, Rachel, are you raising your hand?
Yes, really great presentation, Jason. I really appreciate it. Like the others, I just learned so much in a very brief period of time. I have two questions for you. One, if you're not a financial advisor, how'd you get into this business?
Yeah, so good question. So after I studied economics, and I was a commodities trader for about 3 years, three and a half years after university, and ended up moving to Israel, joined the Israeli army, and got a job at a fintech company that was a payments company as a fraud analyst. So that's where I started to really kind of dip my feet into fintech, and working for this global payments company. And I started to see fintech is really special, especially at that time, and because the democratization of capital, or of lending, of getting people involved in investing and things like Robinhood, all that stuff is really important, but it's kind of like the Spider-Man, with great power comes great responsibility. So I think that what fintech is doing is it's very beneficial, but there's all these kind of traps, or it's always tough for the regulators to keep up with the technology. So when I started to do that, I had another opportunity came up where I worked for a pricing company. I was there for a number of years and kind of got more into technology, and worked for a few different tech companies and started consulting. And where I saw that where we kind of wanted to start working on this, my partner and I, Luigi, was seeing all these small businesses that are being kind of taken advantage of when it comes to these lending instruments. And they can't just go to their community bank anymore because it doesn't exist, or they don't, or their eligibility requirements don't meet their needs. So so that's really how we kind of got into this, was, hey, wouldn't it be great if these companies could raise money from people in their community? Instead of paying the bank, you're paying people who are going to be your customers. So we thought that was pretty cool, and we started building.
Awesome. And then my second question is, how are you guys funding your growth and your growth goals? Is it all crowdfunding, mini investors, or what's the big plan for Miventure? Miventure or Miventure?
Miventure, like MY. But what we found is that especially Spanish people call us Miventure. But Miventure is kind of cool too. So, it's a good question. So, one of our first anchor investors, when we were first starting to surmount the regulatory hurdles and to build the prototype, was one of the clients that I was consulting for. We kind of pitched him this idea, and he was happy with the work that I'd done for him. And so that's how we kind of got the seed capital to kind of build it and get enough traction. And then we raised another round last year, late last year. We joined the Ucf Incubator, and we met a lot of people through that program. We're also in the Rally Social Accelerator, which is another Orlando company. And they kind of got us hooked up where we had the opportunity to pitch to a number of investors in Florida who kind of gave us capital to keep going. The plan is, to use crowdfunding. We obviously believe in crowdfunding, and we're crowdfunding enthusiasts. So, once we're kind of further down the road, the plan is definitely to use crowdfunding. I'm a big believer in companies that use their own products. And there's some precedent for that as well. So Start Engine, which is the #1 equity platform, I think it's #2, but they're top 3. They've actually raised, I think it's over $40 or $50 million over the last 4 or 5 years for themselves on their own platform, which is pretty cool.
Wow, big goals. I love it. Thank you.
Yeah.
So if I was an investor coming in, is there any age restriction? Because I hear about all these teenagers that are on Robinhood and stuff. So what's the age restriction? And 2, you said that businesses can go and request all different types of loans. Are the investors on your site, are they able to invest in all of the different businesses that you have?
Yeah, it's a great question. So there is an age requirement. You have to be 18. We do perform what's called KYC through a third party. So we are confirming the identity of the people investing, making sure that they are 18 and can invest. So that's one of the what's called supervisory duties of a funding portal. And it's also required by the bank, which is acting as an escrow agent in the deal and the payment processor and things like that. So we do that. And there's also investment limits. So the FINRA and the SEC set investment limits to make sure that people aren't, these are alternative investments. So they're typically more risky than a diversified stock portfolio, let's say. So in order to further protect investors, there's a formula that the SEC and FINRA use, which is based on your income, your net worth, and how much you've invested on other platforms. So the base for most people is $2,200 a year, and then it goes up from there based on your income and net worth. So when people hit their cap, we do apply that formula. And if people say, I've got $100 million, then that kind of raises a flag, and we put them through another vendor called InvestReady, and they make sure that they actually are an accredited investor and get a token and things like that. So we do take that responsibility super seriously, and we're making sure people are investing within the thresholds that they're supposed to be. And then to answer your other question, people can invest in any campaign that they want, as much as they want. The minimum is $25, and as much as they want until they hit their investment cap. That's how it works. So if you do hit your investment cap, it'll tell you, and then it'll also send you an email once the time has enough time has passed that you have capacity to invest again.
I see.
Yeah.
Wonderful. You and you answered one of my other questions within answering that, so that was even better. Does anybody else have any questions?
I just wanted to always also say that I really enjoyed your presentation, very informative, learned a lot. Don't have a lot of need for funding right now or funds to invest, but good to know you're there and what you're doing.
Yeah, I appreciate that. I do, just because everyone, one thing I always like to, this is such a cool space and I really like it. So one thing that is interesting is these alternative assets, there's so many different types that people don't know about. So there's a website called masterworks.io where you can invest in art. There's a website where you can invest in wine and they store it for you and you can see the value of the wine and sell it. We're doing small business lending. There's companies that are doing equity for tech companies. There's real estate. There's a investment platform called Ground Floor. I have no affiliate partnerships with any of these companies. I'm just there's so much cool stuff out there. So alternatives should always make up, I believe, my personal opinion, a small percentage of your portfolio because they are risky. But for that small percentage, there's so many things that unaccredited investors have access to that they didn't have access to 10 years ago. Currencies and all these different things. So it's really a cool time to be an unaccredited investor, but it's also a time where you really have to educate yourself and be careful.
Awesome. Well, if nobody else has a question, I have another one.
Well,
So you were kind of, sorry, go ahead.
Go ahead. Go ahead.
No, Rahel, you go. I've asked plenty. Please ask one and then I'll ask mine.
Okay. I was just checking to see if Jason has contact information. I mean, if you want to get in touch with you, because I know you can help a lot of my clients and stuff. And so definitely would love to have that.
Yeah, so I'm sharing my screen. There's my email. It's Jason at Miventure. You can find me on LinkedIn. I'm usually poking around on there.
Okay, thank you.
And Jason, if you just want to type it into the chat box too, so everybody can take it down, that'd be great. So my question also was, you were talking, I heard you talking briefly about, a small business that comes in and it really depends on like what they put together to promote themselves, like their marketing, things like that. Talk a little bit more on that. And, do you guys give advice? Do you refer clients to somebody who does, marketing in that space? Is that something that you see is maybe a need? Because I know that there's a lot of, small marketing agencies within the chamber. Is that maybe a niche that would be good for them?
Yeah, so I would say that is the number one challenge of crowdfunding. Is it's kind of a marketing effort. You're marketing your business, and a lot of times you're marketing yourself because the founder is or the owner is a big part of that. So so what we do is we send people forms that they can populate, where we take down information about kind of like what you would see in a business stack. Your business plan, financial forecast, financial statements. And this is all what's required to populate what's called a Form C. And a Form C is the regulatory form that gets filed for each campaign in that portal that we were talking about before the campaign launches. So I would say one of our biggest challenges is, and this is something that Rahel probably knows a lot about, is when we get to that point where people have to give us their financial statements, like your P&L, your balance sheet. They don't have that. So typically we do have a network of people who are adept in those areas that we send them to, so that is something that we typically have to help them navigate if they don't have those things. And then on the marketing side, we do allocate a percentage of our platform fee to marketing the campaign, but it's always better when the marketing comes from the issuer, from the business themselves, because the most likely people to invest are your customers, people in your professional network, your friends, your family, and people who drive by and they see RB Advisory on the building, and they're like, oh, it's a real thing that exists. So we always encourage them to do their own drip emails, do their own. We give them a sheet about how to market compliantly. There are definitely companies that specialize in marketing for crowdfunding, and they can utilize those. But as the space grows, I definitely think there is a huge opportunity there for marketing agencies to get more involved in crowdfunding. I'd say that that's the most significant cost of launching a campaign. If you're a business that's let's say you're a restaurant that's kind of like an institution in that city, and you have lots of customers that really love you, we'll give you a barcode that people can scan that you can put on the table or you can put on the door. And so those businesses that have a built-in passionate community tend to have a bit of an easier time, or that have, a LinkedIn following, a Facebook following, or, a vibrant social media community. So that's definitely one of the things that when you're considering different platforms to also take into account. But even on the most popular platforms that have big communities that exist on that platform, still the vast majority of the funds tend to be coming in through the issuer promoting their own campaign. It's different platform to platform, but I'd say roughly a good heuristic is about 2/3 typically come from the issuer's efforts driving people to the platform, and about 1/3 come from the platform.
Awesome. And you mentioned the timeline. On average, you said it kind of takes a while on average. What would you say is that timeline? What does that look like?
Yeah, good question. So it depends on the responsiveness of the issuer, which can vary greatly. So we've done it in as fast as a week with someone who's really motivated to launch a campaign. And sometimes it can take a long time, 6 to 8 weeks. But I would say that the average is probably about in the 1 to 2 week time period to pull everything together. For companies that already have a business plan, financials, some marketing material, like maybe a video or pictures, a nice website, it's going to happen faster because they already have everything at their fingertips. One of the benefits that we've seen is for companies that don't have any of that, if they're building the stuff for us, they're also building it for themselves for the future. So it seems to have been like a really good catalyst for a lot of companies to create some of these base materials, like whether it's a how it works video or some pictures or to punch up their website. So it really ranges, but I would say about that amount of time.
Great. Okay, 2 really honest questions. One, what if a company comes to you and they either just have a horrible idea and you just don't see them going anywhere, or maybe they have a good idea, but their plan is just not there? What do you kind of do in that case? Are you guys the gatekeeper, or do you just say, all right, let's see if it happens?
So it's a good question. So it's a bit of a nuanced answer. We have legal supervisory duties, so we do background checks, and we perform all of our legal duties. We do have kind of like a process for evaluating that a company. So we have responsibility to the investors and also to the businesses. So if we're typically looking for companies, we put them all through the same lens. So we're looking for companies that are post-revenue, have at least a certain amount of revenue. Right now it's in like the 50 to 100,000 annually range. Revenue tends to be the best arbiter of if you actually have product market fit. Without knowing too much about anyone's business, a good way to know if at least some people are buying what they're selling. So we're looking for businesses that have revenue, are more than 6 months old, have legal entities, and we interview them, and we're trying to see that they have passion for their business, and you know, some skin in the game. They're past the idea phase. So we do get that a lot, where people are really in like, you know, hey, I want to do a food truck one day, and it's like, okay, cool, like, you know, make a legal entity. What kind of food do you want to make? Like, we try and point them in the right direction where they have like the base materials to get started. I send a lot of people to a guy who makes videos that I really like called TK Cater. He's got a lot of videos about how to make a business plan, how to think about differentiation and your competitive advantage. And so we always try and point people, if it's too soon or not a good fit, we always try and point people in the right direction if we can.
Awesome. And that name that you just mentioned, can you put that also in the chat box? That would be interesting to know. Okay,
Yeah.
my other honest question is, what is the percentage of success that you've seen with Miventure, with the different companies that you've gotten investments for?
So for us, all of our campaigns are still active right now. So we're in the very early stages. What we know is that we're sustainably onboarding investors who are interested in small business lending, but it has been difficult to get small businesses educated that this exists as an option. So that's our biggest challenge. Is actually, when we started this, we thought, hey, it's going to be really easy right now to find small businesses that need money, and it's going to be really hard to find people who during the pandemic want to invest in brick and mortar businesses. And what we found is it's kind of the opposite. It's been really easy to sustainably grow the investor community, which in the last couple of months has grown to over about 1,300 users. And it's been difficult to find businesses that want to view this as an option. So that's kind of our challenge, more so. And so some of the campaigns that we're launching or that are active at the moment, they're actually some of them I'd say are kind of they're not necessarily like in our ICP of who we kind of built it for, and we're trying to figure out ways to connect with that community through things like this, things like the chamber groups in Orlando and Jacksonville, and going to some different events like the Small Business Expo we have planned to go to. So we're working a lot on education about crowd lending and that it exists.
Awesome. Well, that's all of my questions. Does anybody else have any questions for Jason this evening? No. Wonderful. All right. Well, then we're going to wrap up the night. I want to say thank you so much to my wonderful committee. Tony Smith from Mobot, our co-chair. Andrea from Certified Computer Solutions, Rahel Noor from TaxLeaf, and Rob Gross from Complete Communication. And don't miss, oh, I did not change the date. I apologize for that. It's first Wednesday in April, and we're going to be doing fitness technology. So come on out for that. And then sponsorships are still available. Contact Ingrid, she's on our call, or any of the chamber, and Jessica or Christy to become a sponsor for SeminoleTech or anything else in the sponsor. Again, thank you so much for RB Advisory for the sponsorship. And thank you for attending this evening, everybody. Jason, thank you so much for your time tonight. That was some great information. We really appreciate it.
Thank you for having me. No, people don't usually ask questions, so it's always nice to get questions.
Well, you were really informative. You answered them great. So we so appreciate your time tonight, and good luck with your Miventure.
Thank you.
Good night, everybody. Thank you so much. Bye-bye.